The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 15th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows the interest should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't get to the phone, you can always send me an email, steve at tfnn.com. Inside that heading, just put radio show question, of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading off 13 points at 21,980. S&P off 3 at 2462. NASDAQ 100 down 4. Russell's off 9 points, about 0.7% to the downside. Semiconductors are flat. Transports are flat. Volatility index is down nearly 1%, 11 pennies is what that would be. Gold is off $10. Silver's down 40 cents. Light sweet crude off 15 cents. Leading the charge here to the upside, it is Intuitive Surgical up 1 4/10% or 13, almost $14. Chipotle is up 7. Wynn Resorts up 7. Kite is flying high. Kite Farm up $6 or 5%. Coherent is up nearly $6, 2.5%. To the downside, it is Advanced Auto Parts down $23, 21%. That's getting a little shellacking. Priceline off $13. AutoZone down 13, 2.5%. Ulta Beauty, not so beautiful right now, down $9 or nearly 4%. Dick's Sporting Goods having a sale today, off 20% if you want to buy their stock. That's down seven buckaroonies out there. So where do you want to start? Well, I tell you where we start here with the flat market. We'll come back to that, but we did have a couple questions that came in late yesterday. So let's get to those. The first question came in from Tim, and Tim was looking for, where's that chart out here? What do I want to use here? I want to use 3 time frames. I said we would use this in the past, and we're going to use it in the future. He wants to take a look at CLNS. That is Colony North Star Inc. Now, when you do call or send in a request looking for some analysis on an equity, whatever it might be, ETF, whatever it might be, I will, and remind me if I don't, I always want to just at least go to this chart here, and you're going to take a look at 3 panels, daily on the left. Dead center is going to be that weekly, and over on the right-hand side is going to be the monthly chart. And that way you get to see the TAS market profiles for that specific instrument for each of those time frames out here. Now, a good entry point or an entry point in a stock that has been certainly just hammered. The question is, as it has worked its way off of the bottom, which came in during the week of April the 3rd, we now have its first retracement. But because price is below the weekly bottom of its box out there, you didn't like to see that take place, Tim. You now have to resort back to the monthly bottom of the box at about 12 1/4. Now, if we just simply take a look at retracement levels from the most recent bottom to the most recent high, what that's going to do is say, the bottom of that monthly box is very close to the 0.618 retracement, which is 1181. So you're looking at a range of 1181 to 12 1/4. And as long as it's moving down there, on a monthly basis with less than 75 million shares, then maybe that would be a good entry point. Because if, in fact, this equity decides to take out 1252, close below it, trade below it, and do with more than 75 million shares, then you've got an A to B equals CD to the downside. And the answer would be there is no good entry point on CLNS. So you've got to be patient and just right back when this equity, when either you see some kind of sign of strength on a daily chart, we haven't seen that, all we've seen is a sign of weakness, or when price gets down to those levels. All right, Tim, so thanks for writing in. Sorry that we couldn't get to it yesterday. Phil wanted to check into ticker symbol KEM. That stands for Kemet Corp or something along those lines. And in this case here, we have to say, hey, our hats off, yours and mine, to Phil, because he's in this equity in the 6-ish range. It's right now trading out at 2043. The question, though, was price targets and stops on this. Now, because you're in this at $6, I'm assuming, maybe a bad assumption, that you're in it for the long haul. So if we take a look at the long haul, that being the monthly chart first, what you're going to see is that this equity, this is the month that we're in right now, is trading above the prior monthly swing point from February in 2011. Now, that swing point had 10 million shares. You are already at 21 million shares, and to my knowledge, it's only August 15th. So you're blowing past the level of resistance. That was also a nice little bearish engulfing candle, key reversal area. So your stop would be somewhere below 1705 out there. You'd have to you want to definitely park it underneath that, and probably well underneath that, again, assuming that you're looking at this for the long haul, because the long haul suggests to me, Bill, that the next target area is going to be a prior bearish reversal-ish signal swing point, which is either going to be 2742, but more likely than not, that 3474 level. Now, if we just take a look at a retracement on a monthly basis, from the high out here, taking you back into 2004, down to the lows in 2009, your 0.618 retracement level is around 3105. So 3105, 3474 really becomes the target type range. Does that mean you'd get out there? And heavens to Betsy, no. We have to see what it's doing, what type of volume is out there. And that is really just that's not the real retracement, because if we go back a little bit further back, all the way to the actual high in 2000, down to the 2009 level, this wants to get to 5092. Is just simply, it's dead cat bounce area. So our hats are off to you, Ken, and or Phil, I should say. It's KEM, KEM is the ticker symbol out there. And the next time you have a trade like this set up, go ahead and send it on in to Steve-O. We'll pass it on to the Denners out there. So stay put inside this. You can see there's a brand new daily market profile that formed yesterday. I think we just happened to mention as we were closing out the session here, you're trading above that level, that high out there. So everything looks pretty good for Kemet Corp. We've got a request, looks like came inside the Tiger's Den, and somebody wants to eat some soybeans out there. Hey, you like sprinkling some soybeans, especially, even though they're supposedly not good for you. They're not beans. Beans, the magical food. These are the kinds you sprinkle you maybe on some fried rice. Of course, that's not good for you either. But hey, we like to do things that are good. So, we get back, we're going to go look again at Atlanta at November soybeans.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 6. S&P is down 2 points. So for Danny in Atlanta, we're going to go take a trip out into the fields and take a look at the soybean futures contract for November out here. And as we take a look at it, you're going to see, in this case, we're just looking at these bar charts, and you're going to see basically all types of red bars, otherwise known as the red shoots out here. So shoot, this thing looks like it's going lower, Danny. Now, there is a brand new weekly profile that formed, and the bottom of that box is at 921, even Steven out there. So you're 925 and change right now. So I would look for the 921 level to see if that, in fact, holds as support. So are you looking to go long? Are you short? Tell me, what are you doing? But regardless of what it is you're doing, that would be the level where you may find some support. If it gets beyond that, well, then looking to go long. So look for that area. But that doesn't mean that's where price necessarily needs to hold. We can draw a quick little trend line. This is a weekly chart that we're looking at out here. And if we draw just a nice little green arrow trend line, you know, that might be the spot. I mean, you're getting towards that range, which is the swing point from the week of June 19th, I should say. So you got that low, which is in the 907 area. You've got 921, and then you've got just a little trend line out there. Now, what you'd like to see is some type of bullish reversal candle on a daily chart out there. If you get that, then that could be your first signal, because what you also have out here, right, on the daily chart, we can see, you know, several different A to B equals CD down patterns out here. When I say several, you know, you've got this one, which is still really in play out here. You're beyond the 1 to 1.618, so the 1 to 2 gets you into the 909 and a half area. And so at the end, there's other A to B equals CD patterns. You know, we could easily draw this one here. So that way, for those of you at home, you might say, well, Steve, why didn't you select this one? okay, we just did. We selected it. So you've got the A to B equals CD down patterns that are complete. No Gartley of any sort. But once you, so the market's doing 75% of the work for you. When you get that bullish reversal candle, then you've got your trigger to go ahead and take that long side that Danny is looking for inside of the November soybean futures contract. So what say you? You say, hey, what are the markets doing right now? Yesterday we talked about, we should go back to it. We talked about, we were looking at the equity futures contracts, if I'm not mistaken. And we were looking at the 2-hour time frame. Were we not? Now, what I don't recall is whether we were looking at it on the NQ or it was the ES. Probably was the NQ out here. So as we go take a look at it, one of the things we knew was that as soon as that price oscillator, got to get that cursor out here. Come on, we're on the air. Let's respond a little quicker than that. I'm referring to the tools that I'm using out here. So it was right here at that 2 o'clock time frame where we knew that price oscillator, bottom panel, was getting right up to the 0 level. And so what we knew was to anticipate that we were going to see a meetup of Stevie's red line and price. We just didn't know when that was going to take place out here, and it took place, about 10 o'clock this morning. But the thing is that when that took place, you didn't see the old test and rejection. Instead, what you saw is price slice right through it. Now, slices right through it says you've got a retracement, not necessarily that that's a top. You've got a retracement. Why retracement? Because that price oscillator is still above 0. Now, what we've seen here over the course of the last couple of hours, we've seen a test and rejection of Stevie's red line. So that means, so as we can figure it out here, it looks like 59.19 is the number. Is it 59.19? It's 59.17. Yeah, 59.18. Let's call it. That is your line of demarcation on that 2-hour chart out there. You get above that, then what that says, the NQ is going to continue higher. You may say higher to where, Steve? That's what I would say. And the answer is going to be, oops, I put that in the wrong spot here. If I do that, I'll never get back to it. Come on, work up there, work. The answer is, sorry for that little pause there. The answer would be the top of its daily box out here, 59.60. However, that may continue to act as a resistance zone, and therefore price inside the NQ could fall all the way down to the 58.72 level. That would be the bottom of the daily time frame out here. With regard to the ES mini, we would see the same pattern on our screen out here, but we don't need to show that to you because we had really the same thing in essence take place. But price has fallen back down to support, and it has not broken support. Support here being the brand new, I do mean brand spanking new out there, and that is a brand spanking new TAS market profile daily, and that says the bottom of that box at 24.59. We'll call it in a quarter or 50 since it says 0.38. That's just not possible. We'll just simply say that becomes your support area. So what is it that these markets want to do? That's an excellent question. The weak link out here yesterday gave you a nice bullish reversal signal. It's a Gartley buy. It's a live, active Gartley buy inside the Russell 2000 out there. Big, huge three-river Morningstar pattern. Now, you're not getting follow-through today, and that could be a problema. But at this stage here, this pattern is still active. The weak link is saying, hey, Steve-O, I'm done going down. I want to move higher. In this case here, higher would be up to about the 1420 level. But it needs to prove the point. And the point is that this needs to get back about 1395.20 in order for that pattern to truly go ahead and complete. Now, I haven't seen any emails or questions out here, even inside the Tiger's Den, about, hey, Steve-O, what's the yen doing? Because that is, in fact, an excellent question. So if we go take a look at the yen, that would say, I want to just go look at it, say, hey, what is Goldilocks doing? So here is this is very, it's not Schultzy, right? It's the guy, it's the what's his name? Artie Johnson. Artie Johnson saying, something interesting. Now, if we take a look and we do the Artie Johnson look, and we say we're going to look at the yen in a moment because Artie wants to go take a look at gold and look at it on a 30-minute time frame, you might be saying, well, I know I would be asking that, why did gold stop where it did this morning? And the answer would be, well, son of a gun. Look at that. it made that beautiful seventh wave move to the downside. That's starting with the little swing point here at about 4 o'clock in the afternoon. Back on the trading day, it looks like it was August the 13th is going to be my guess out here. This system is acting slow. There's something running in the background. I think I got a hard disk problem, so I'm doing all the backups, and we'll use Amazon, order a new drive, and figure out all that mess out here. But nonetheless, if you watch us on Tiger TV, you can see where we started with the wave count to the downside, and you can see letter G. You can see that Goldilocks on a 30-minute chart singing in the key of G. But that's the 30-minute time frame, and now price has gotten up to, in essence, one level of resistance. Another could be 1282 out here inside of gold. Of course, if we looked at the yen, we'd really see the same patterns out here. But what we're going to do is we're going to go look at the daily time frame. We're going to step back for a moment, take a ride on the reading, and go read what the yen is doing on its daily time frame chart. And we'll take a look at the currency pair first. And the currency pair has made a very nice bottom. And it's done that thing called the dead cat bounce by getting up to the 110 area. Now just doing a bit of a retracement. Probably setting up the next move higher. That means the next move lower. Inside of Goldilocks. 0 for TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So every day when I wake, I ask myself the same question that you ask, which is, hey, honey, what's for dinner? And then the second question that I ask myself is, hey, is the yen bonds and gold doing that same correlation dance. And as we take a look at the 10-minute chart here for those three instruments, we can answer that question and say it is still in play out here. So that means that that very next chart that you and I are going to take a look at is very important to us. So if we go take a look at gold, yen, and treasury bonds, as soon as they populate on our screen out here, we're going to take a look at the top chart is Goldilocks. You're going to see that right now price is sitting right on Stevie's red line, right about the 1279 level out there. You're going to see inside the Japanese yen that the yen is trading below Stevie's red line. Now, at this stage here, it just means in the case of the yen futures that they want to continue to pull back. That'll put a bit of a shellacking or hurting on any type of move higher inside of gold. The same would hold true for treasury bonds. As we take a look at the September contract, you're going to see price is just slightly below Stevie's red line. Should all these instruments close below Stevie's red line, what that means is more of a retracement, or at a minimum, more of a retracement out here. It really is all about the yen. To tell you why, I don't know. It is the important element, though. It's just we don't need to know why. You just need to know that it exists out there. And as I say, each morning that you wake, after you find out what is for dinner, just simply get on those screens and say, hey, is the correlation, directional correlation, still in place out here? And if it is, then at least you have two things to take a look at. And sometimes there's a divergence. Right now, there really isn't a divergence out here. What we do is we look for some logical levels of support or resistance, or you go to those intermediate term time frame charts to help you identify and anticipate when you're going to see the so-called bounces up and down and so forth. And we saw that by taking a look at a 30-minute chart for gold. We saw that singing in the key of G out here. Now, we can even do better than that, right? We can do better than that just simply by going ahead and pulling up this chart here. Take a look at 6240 daily and weekly market profiles for gold. And we can see that, hey, on the 60-minute basis, that was nice that it closed above 1274.70. 1276 is a key number today because that is the top of the daily box. The exact number out here, let me give that to you. As soon as I can actually get it on my screen. There we go. So now we can see it. The top of that box is 1276.90. You're 1275.80. If you close below 1276.90, you're back inside what we'll call the box range out here. Now, that box range is not either bearish or bullish. It's neutral, but that doesn't mean that price can't continue to pull back. In fact, it would suggest that it would. Retest this morning's lows, maybe get down to the 1255.70 level, which is really when we take a look at the longer term picture, that being the weekly time frame out here. That's really what's in play. Now, what in the Sam heck could make this change? Well, closing above Stevie's red line, the yen starting to move higher and say, hey, I was just kidding you with regard to that retracement thing that I was doing. It could be something like something that creates problems over in the North Korean peninsula, right? I mean, that could certainly be a problem out here. And so when we take a look at the market is a little uncertain as to what it really wants to do. It's just waiting for more information. Because the answer that you should be asking yourself is, hey, Steve-O, is it possible, just possible, that last Friday was the next, or was that the most recent low, and the markets are getting ready to motor on higher? And how would you answer that question? Well, let me tell you how I would answer that question. I'd go back to the stock chart and I'd say, well, give me some other events that might be, similar in nature, and use that to answer that question. And then start pasting in there some of the different technical tools and the way that they have responded and acted in the past to just simply complete the answer to the question. So we put this chart up here. This is just the chart of the last 3 years. So we can see a number of geopolitical events that have occurred out here, each of which eventually formed a bottom. Each of which could have been the beginning of a move lower in the markets out here. But were they? And the answer is no, they weren't. What were those events? For those of you not watching us on Tiger TV, they go back as far as, hey, do you remember when somewhere it was the Russians or some faction of the Russians, but somebody shot down an airliner? was a Malaysian airliner. MH17, I believe, was the name. Now, you would have thought that all holy heck could have broken loose and World War III or IV or V could have broken out there. Did it? No. What the market did was it formed a bottom. And then what we had was, we certainly had that Ebola scare. It was spreading like wildfire. Remember, it came over here to the U.S. But it was that moment of optimism where it was contained, where the market said, okay, I'm ready to move higher out there. That formed a bottom. Remember back in the mid-July, August time frame, back in 2015, when we had the old China was crashing, and they got CNBC doing specials and coming on for days at a time, and that was just a little mini crash, and what did that do out there? This guy didn't really keep falling. It just set up another bottom. Then, of course, we had that correlation. Speaking of correlations, I'm glad you asked me about that. The correlation between light sweet crude and the S&P 500. You couldn't get it out of your mind. In fact, you and I, we even discussed it a number of times out there. And that was the so-called oil crush, not Candy Crush, but oil crush, from $61 down to $26 and change for a barrel of light sweet crude. Of course, that formed the bottom. That could have just simply been a cataclysmic, we're going to go enter the old bear market, but no, it didn't do that. Then we had Brexit. That brought into us a nice little bottom. Then we had the old U.S. elections. My goodness, what happens no matter who wins out there? That set up a heck of a nice bottom. And then we had I didn't do this, but you went ahead and started sending Tomahawk missiles out into Afghanistan just to thump those mountains out there and to beat our chest, so to speak. And that didn't create a problem. That formed the next bottom. Then we had all that Comey, Mueller, Russia stuff with regard to impeaching Mr. Trump out there. That just formed a bottom, and now takes us to Korea. Now, in the case of Korea, it's not over. I'm not talking Chick Korea, although you got to go see, if you haven't seen Chick Korea, you should go see Chick Korea. I'm referring to the North Korea out here, and we just simply don't have certainty yet that bottom is in, that has been resolved. And I don't mean like finally resolved. I mean just a promise that it's being resolved. We've had small little smidgens out there, but hey, we know with the two guys that are kind of controlling this, the rhetoric of this, that it potentially is far from over out here. But when you and I have the promise that is over, what makes you believe, unlike any of these other events, that we won't see the same type of thing out here? Is this it? Is that what it is? You actually believe that the markets have just simply, they've gone too far, too fast, and that what's going to start the next bear market is some type of skirmish, and it probably is just a skirmish, if it is a skirmish, between North Korea, South Korea, the United States of America, and everybody else might throw their hat in the ring out there. Do you think that's it? Do you really think it's because of the valuation of the S&P 500? Has the Have you ever heard that the bear market started because of the valuation of the S&P 500? Really? I haven't.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. You know, the truth is the markets are the ones that are just telling us a story here. I'm just a narrator and just picking out those points in time because, hey, let's face it, we all get caught up and tied up into a lot of stuff out there. In fact, if I didn't mark these data points on my chart out here, you know, I wouldn't be able to do I wouldn't be able to do myself very good out here. And so it's important to know and anticipate when you have events like these, like the ones that we're dealing with right now, that when that event sees the light of day out here, that is going to be the next buying opportunity. I don't even care if we are in the so-called unfavorable seasonal cycle, because we are. But if this is unfavorable, we just haven't seen it. We just haven't seen it out here. Instead, what we should do is, now the question becomes, it's an excellent question. Hey, Steve-O, how do we know when that bottom is formed? Well, you know, what happens is the market will go ahead and generate some type of pattern out here. But we already have that pattern in play inside of North Korea right now. That pattern took place here. Now it's the S&P that we're taking a look at. So let me, come on, there we go. Let me hold on a minute here. Let me pull this. Let's just do the ES mini on a 30-minute time frame. So as we go ahead and we explode this up. Come on, here we go. Explode up. I hate when this thing is slow like this. There we go. Okay. So we know that the nice little bottom formed here where price is moving lower, doing less relative energy, had that nice little hammer. By the way, you know, at about midnight last night, 11:30, I think it was, when we had that seventh wave move. And the same thing that formed the bottom in the 30-minute has formed the most current top in the 30-minute time frame chart. So these things work with regard to both sides. Yeah, it's just a short-term chart out here. And it most certainly is. But we had that pattern that formed inside of the marketplace. So it's just a matter of patterns that would form. There were patterns that formed in each of these scenarios out here. And I can show you examples. That way you don't have to just trust me. I would never want you to just trust me. I'd rather you just say, well, prove it to me, Steve-O. So if I'm going to prove it to you, then let's go take a look at, so let's do this here, slideshow. Let me just pull this up from this current slide. Before we were dealing with this is a daily chart you and I are looking at. This the NQ. This had the nice Gartley buy pattern out here. You had the A to B equals CD to the downside. You had the bulls rush in. That was a pattern that was out here. Took us to higher highs out there. So there's a pattern that's going to form here during the U.S. presidential election out here. You had the A to B equals CD pattern. You had that nice little rising window after the morning of the election. Even had that little inverted hammer, which I don't like to use as a bullish reversal signal, but it is considered to be bullish out here. It was a gap to the upside. It was really the patterns inside the futures markets that were generating the buy signals out here. So we can go back to each of these events. You can go back to Brexit out there. And Brexit, you can see wave number 7 to the downside. You can see price moving lower. You can see the bulls rushing in order to be able to form that bottom. That was also on that 30-minute time frame chart for the ES Mini. And so, the question would become, hey, was the bottom that we saw on Friday, that little price RSI pattern, was that in fact the bottom? Now, there's a possibility that it in fact was. And the reason why we say that or suggest that to you, that it could be, is by taking a look at the volatility index. And so if we take a look at, and yes, yesterday we did have a negative one-day rate of change of minus 20.50, well below the threshold of minus 10%. When that occurs, as you've seen them in the past, they have marked initiation points of moves inside of the S&P 500. That's the chart that we're looking at inside of the S&P 500. I'm not going to ignore it. You're not going to ignore it. Does it always work? No, it doesn't always work. Does it work a substantial percentage of the time, 80, 90%? The answer is yes. So we cannot ignore that. Now, why would it continue to work out here, assuming that the rhetoric just kind of stays, dormant? No guarantee of that. We just simply resort back to the old spot volatility index. And if, in fact, we're to see that spot volatility index, the VIX out there, close below 1197, that's that upper Bollinger Band. We're above it right now at 1213, by the way. But if it closes below 1197, that tells you and I that what the spot volatility index wants to do is get down and go test that 50-day exponential moving average, and that's at $11 even Steven. It's going to do that. That says the S&P goes higher. You get below $11 out there, then it's going to go explore the bottom of that band, which is right now priced at 946. Is that unthinkable? It is not unthinkable. The patterns are in play as we speak right now. We just don't know. I don't have some event that I can point to that says that was the bottom. And why would we be looking for an event like that? And the reason we would be looking for an event like that is just simply because of the past. The past being, as an example, here's the Korean War back in 1950. You see, the way that markets work and they form these bottoms, it's with the anticipation that the situation is going to be resolved. It's that glimmer of hope. It is that optimism that is born within inside of you. It's in your heart. It's inside your soul out there. And it's inside the stock market, right? In the case of the Korean War didn't end July 8th through the 12th in 1950. But what happened July 8th through the 12th in 1950 was there was that glimmer of hope. There was that optimism that with Task Force Smith rolling into town out there, that was enough to go ahead and say to the stock market, okay, we're going to go ahead and resume that move higher. You can see that nice little Gartley buy pattern, by the way, that had formed back in 1950. You can go back to World War II. This is not the complete time period for World War II. This just takes a look at what occurred in the stock market between Pearl Harbor back on December 7th in 1941 and with the market moving lower. Now, is this a set of tools or techniques that's going to call the top or call the bottom out here, the very bottom tick, the very top tick? No, that's not what we're trying to do. That's not what I'm trying to do with regard to this. What I am trying to do is say that each day that you trade, when you decide to put on a trade, the only battle that goes on in your mind is a big battle. It's that battle of psychology. Am I right or am I wrong out there, And if you got that positive optimism, even if you're betting on the short side of the market, right, it's the direction that you're trying to get right out there. That optimism and getting over that psychology is key. Well, the psychology in the markets out here isn't when the whole whole deed is done. It's the optimism that the deed is going to get done. Here we had the Battle of the Coral Sea back in May 7th of 1942, and that cemented the bottom. There was that feeling of a positive resolution to the war. It doesn't have to just be wars, okay? It can be other elements. It can be, as an example, we just go take a look at the heart attack that Eisenhower went through back on September 24th. The market went down for, I believe it was about 7 days or so, and the media did a good job of keeping everybody up to speed. And once it looked like he was going to have a full recovery, the bull market just continued to move higher. There's a nice little Gartley A to B equals CD pattern you can see that occurred back then. Persian Gulf War is another great example out here. You know, we saw a couple of different periods where there were glimmers of hope, you know, such as the reserves being called up back on August 22nd of 1990. Then 100,000 troops showing up in November of 1990. And then it was that Operation Desert Storm. Markets never looked back. Optimism, my friends, optimism will send the markets higher. Steve Rhodes from TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So, this is not certainly a show about politics, but what we did during that last segment, this is a show about taking a look at political or geopolitical type events and how the stock market responds. And that way, when you study the history, right? Studying history, that's a new concept out here. As you and I study the history of what the markets do, then that means that you can act. Because the question might be, well, what do I do now? Because what we do know, we don't know if this Korean situation, we call it a situation, has been resolved. To my knowledge, it hasn't really been resolved just yet. And it could very easily get heated to the downside. I'm sure that you can see that as one possible outcome. And if, in fact, that occurs, what you would anticipate is that the market will move lower. How much lower? That I don't know, but lower. And what you would be looking for, what we would be looking for. And if it starts to move lower, and if this thing were to get out of hand, it's, that conversation is a different conversation about how bad things could be. But my role and responsibility to you during this hour between 1 or 2 is to help you navigate what are the markets doing and what to anticipate. And so no matter how bad things could actually get, what you and I would be doing during this time frame is seeking that pattern and seeking that bottom, where you would be loading up the truck out there, just as you would have wanted to have loaded up the truck at the bottom in the U.S. election, or in Brexit, or the oil crush, or the China mini crash, or Ebola, right? The or. It's not going to stop out there. We haven't even talked about terrorist events and their effects on the market, and then what the market does after that. So, I'm not wishing for bad things at all. Stevie, optimistic Rhodes, right? Exactly. But what I want you to actually be able to do is prepare for what action you would want to take should anything happen. Maybe the market knows something with the bottom that is formed with yesterday's initiation move inside the spot volatility index. It wouldn't surprise me. But that will leave till tomorrow. Folks, stay tuned. Your favorite polar bear, David White, is up next. After that, Tom O'Brien from 3 to 5 and Andy Heck to take it on home. We'll see you on Wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.